See, I think clearly markets are looking at some sort of stability. I think as the market is heading towards expiry, I think we could see a lot of volatility in the coming few days. But I think the biggest factor which is actually upsetting the markets is the continuously sell off from the FIs. And I think that is putting a lot of pressure on the currency. And I think the currency is the key factor which is now under close watch. So I think even if you look at the dollar index, unless the dollar index comes up to levels of say 98 to 100, we are unlikely to see any immediate bounce. In fact, any bounces which are going to come in are going to be used for basically large FIs to actually exit their positions. So I think we need to wait for some time. March is also going to be a month where all of us would appreciate that it's a month where a lot of market participants do a lot of tax adjustments. So I think clearly the market mood is such where I think clearly if at all anybody wants to buy any sector or any stock, I think he needs to give in a slightly longer time frame. We have been telling our investors that companies from the auto space, company from the capital goods space, typically companies which are from the hospitality and the hotel kind of segment are definitely looking attractive. But I think you need to give in a time frame of at least 12 to 15 months. And we expect that from the April to June quarter, whatever the government has announced in the budget, specifically on the tax exemption side, the RBI cut which has come in, I think all that will get reflected in better numbers, from the corporate sector. In fact, most of the banks which you mentioned in your commentary are down because people are expecting that possibly, January to March quarter also could be a little challenging quarter for the PSU banks. Although today there was some news flow from the government side that they are looking at appointing merchant bankers for some of the smaller PSU banks. I think my sense is, these banks definitely have very good balance sheets, good asset quality levels, but I think the trigger for growth is yet missing. And I think that could possibly be visible only from the April to June quarter. So I think we need to be a little patient. I think some more pain is left in the market. And only after that, I think you could see a good bounce in the banking as well as the broader market. So I think, till then, I think it's going to be a volatile market and we'll have to take all this in our stride. No, I think see, Coal India is a company where I think it's going to be basically a kind of a beneficiary of the power generation kind of demand scenario in India, and I think the condition here looks quite conducive. Our call is very structural. We believe that if you have a slightly longer time frame, then I think coal prices are unlikely to crack. In fact, they could see a little marginal increase, and most importantly, after the January to March quarter, typically Coal India is known for giving hefty dividends, so it could be a good dividend play also. Our sense is that 350 to 360 is a good accumulation zone, provided the investor can wait for 12 to 15 months. Our sense is that as the economic picks up, power generation is one of those areas where possibly you could see a good uptick. On the supply side, there's a big crunch, but on the demand side, power generation companies are doing pretty well. So I think they should definitely do well in FY26 also. So I think if somebody has a reasonable steady expectation, target price of around 380, 385 is very much possible. But I think the dividend yield factor will also play out once the March numbers are out. No, I think my sense is that valuations would need to be made little more attractive because if you see the experience of Tata Technologies, which was the previous IPO, the company made. I think after a lot of excitement, the stock, after the initial listing gain, has proved to be not a very big kind of wealth creator, at least in the near term. Of course, Tata Capital is a very big setup. I think they have a very large net worth, a very good geographical network. So I think markets were expecting this announcement from the management from the time this was planned by the company. I think clearly in the short term, beneficiaries could be companies like Tata Motors, which could unlock a lot of value because whatever OFS happens, that money is obviously going to add to the cash flow of these companies. My sense is that unless we get little more clarity on the valuations, which is very important in this kind of market, we would like to know, as to when this issue is going to be timed. Probably the market sentiment will have to be better because such a large IPO will require that the market sentiment is also equally positive. I wouldn't be surprised that they would be looking at how the market conditions also improve and then position the IPO. But valuations, I think, will have to be priced quite attractively because despite giving a premium, I think a 1 lakh crore valuation, definitely markets would like to give in a proper check before they invest their money here. So I think institutions will obviously put their money, but retail interest, I think, will come only if the valuation is priced attractively. So I think this company definitely has performed well, and I think they have a very strong local kind of consumer base, and more importantly, they've managed to scale up their operations in a much better way. I think clearly, I think with the commissioning of the new store, that would obviously add to their volumes. But I think the biggest caveat and the biggest threat to them is the increasing, trend in gold prices. So I think we have seen other comparable companies like Titan, Senco Gold, where numbers, for the December quarter have not been very encouraging. So I think we'll have to closely watch gold prices, because if gold prices go beyond a particular level, then I think it's not going to be easy for the companies to pass through these, higher gold prices to the customers. So I think clearly this is going to be a major kind of concern. But otherwise, I think in terms of their positioning, in terms of their earnings growth, I would be not be surprised that they record 18 to 20% growth for even FY26. And as far as the gold opportunity is concerned, I think we are more positive on the gold finance companies, which basically lend capital against gold deposits. And here, I think both Muthoot Finance and Manappuram definitely look poised very well. In fact, most of the demand is coming from rural areas, and most importantly, there is hardly any concern on the asset quality side. Plus, the loan to ratio, the MTM is definitely well covered as far as gold prices go up. So, Muthoot Finance and Manappuram, if one were to take a call, I would say that a small position here could definitely yield very good return, because we feel gold prices are poised to further increase in the next 6 to 12 months.
So, do you think this is the right time to enter Thangamile? Very briefly.
I wouldn't be a buyer at these levels. I would prefer to wait for a mild correction. See, because whenever a stock goes up by 18-20%, that is a level where possibly, normally always retail gets trapped. So I would say that it's better to wait for the markets to stabilize, let the stock correct and decline. And I think these opportunities could come in, and on a day when the stock has gone up by 20%, we are in no hurry, especially in this kind of market. No, I think my sense is that Trent is a very matured retail player, and I think the introduction of Zudio has given them a very strong mass appeal. However, competition is hotting up, and I think this segment will see a lot of competition from new players, especially players like Reliance who have teamed up with Shein. So that definitely is going to create a lot of excitement in this segment, but at the same time, margins in this segment will be under pressure. Now, coming to the opportunity for retail over the next couple of years, I would believe that consumption is a theme which is going to be very strong. We would see some benefits coming in, from the budget, taxation benefits, plus rate cuts have been announced. So I think somewhere from the quarter one of FY26 onwards, we could see a little kind of bouncing back of consumption coming back in, specifically the retail segment. Trent has always focused on quality, innovation, and I think despite the fact that the stock has corrected, I would say that somebody wants to build a portfolio. Even the current levels today, where the stock is currently down by about 2%, it could be a good opportunity to start a small nibbling in this counter, provided you have at least 12 to 15 months a time frame. Because it's very difficult to give you a target price as to whether it would go to 7,000 or 8,000. But yes, I think in terms of their positioning and in terms of their retail reach, I think the Tatas have done a very good kind of job. Most importantly, it's a trusted brand and now has actually started offering value for money products. Of course, the entry into the lab grown diamond segment is another big opportunity. And if they click it properly, that could be another growth engine for the company. So I think one should take a longer term call here. In the short term, it's very difficult to visualize how the stock will correct or how the stock will be volatile, because numbers actually for the third quarter were below market expectations. In case of Zomato, I think you need to take at least a couple of years of a time frame to actually get the best risk reward. In the near term, the stock appears to be fair to fully valued, because I think clearly quarter three numbers were not up to expectations. But I think within the food app space, the dominant players continue to be Zomato and Swiggy. And as far as competition is concerned in the QSR space, I would say that despite the competition, the runway for growth over the next say couple of years is going to be quite significant. This is definitely a growing segment where I think there's a space for all players to survive. But Zomato definitely would be the best positioned player, because they've got a strong profit focus, cost focus, and I think in terms of the reach, I think they are present not only in the tier one but even tier two, tier three cities. And gradually, the new India food, eating habits are changing. So this is unlikely to change. So I think somebody who's got a 18 to 24-month view can definitely think of accumulating the stock. The stock can definitely touch 300 plus level, but I think you need to give in some time. It's not a stock where one could expect some fireworks in the short term. But yes, over the next say couple of years, this could definitely make a lot of money for investors. So I think, see, Nazara Technologies has always believed that the better way to grow is through inorganic acquisition. So I think this acquisition also will give them a kind of a better customer reach and a much more geographical positioning. I think we need to understand what is the kind of incremental revenue and the profitability which comes from this acquisition. I think some more clarity would be needed there. But Axo Nobel acquisition is quite interesting. I think for 2,000 crores, the powder coating unit and the research center which is going to be taken over, that would add a lot of cash to the existing Indian entity. So I think Axo Nobel could be interesting to watch. Plus, considering the fact that they have a well placed business model in terms of the presence in the domestic paint market, I would look at Axo Nobel in a more positive kind of constructive manner. So I think these news flows in these kind of markets, unfortunately, I have a very marginal impact or maybe virtually no impact. But I think longer term, definitely, I think these kind of decisions are going to benefit these companies in the longer term. So I think Axo Nobel could be definitely be considered if one looks at it from a longer term point of view. EV segment is concerned, we are positive on the wagon manufacturers because we believe that this is a very concentrated market with just 2 to 3 companies. Titagar is the market leader. You've got Texmaco Rail and you've got Jupiter Wagons. So I think, as far as the railway expenditure is concerned by the government, we believe that despite the fact that this time the budget did not have any big kind of announcements, I think the capital expenditure which is planned over the next 3 to 4 years not only includes new railway stations, rolling stock, but a host of initiatives. So I think the capex story is going to be played out quite strongly here. But wagon companies could get benefit quite significantly, considering the fact that a fresh tender for new wagons has yet got to be announced. And most of these wagon companies are sitting on at least 2 years order book. So I think within the space, Texmaco Rail is also sitting on a healthy order book. Jupiter Wagon is also sitting on a pretty good order book of almost 4,000 odd crores. So I would say that somebody who's got a 12 to 15 month kind of time frame could definitely accumulate both Texmaco Rail and Jupiter Wagons. We believe that both these companies have got a lot of earnings growth kind of traction kind of tailwinds, and which I think should be visible in FY26. Currently the market mood is bad, but I think clearly if one were to take a slightly longer term view, these could be added to the portfolio. The Jan to March quarter is going to be an important quarter for the automotive sector because this is a period where a large part of the sales come in. So I think even construction companies, infrastructure companies, capital goods companies, in fact hospitality companies also. So I would say that you'll have to take a pick and choose call. But overall, I would believe that March is a month where possibly we'll have to see how the FI flows also pan out. February has been a very bad month, and if this momentum continues even in the month of March, then I think what we have seen in the last 7 out of 10 years for the month of March may not get repeated this time. So we'll have to keep our fingers crossed. But I think selectively companies which come out with better quarterly numbers, I personally would sense that the quarter 4 is going to be significantly better than quarter 3. And obviously, if demand is better, the margins are better, and the volume growth is better, I would not be surprised that stock specific wise you could get a lot of upside. But overall, the market mood would depend on the liquidity flows from the FIs. If there is a kind of bounce in the correction in the dollar index, which I mentioned to you earlier, that I think would be a big trigger point because I think markets have realized that they've already got significantly oversold. So I think when the bounce comes is going to be a crucial factor, but it largely depends on the FI outflows.